All right, let's jump right in. Today, we're digging into a document that's all about a massive 6.4 billion birr bet on the future of banking in Ethiopia. We're going to break down the Dashen Bank share offering perspectives to really understand what this huge capital raise means for the bank, for anyone thinking about investing, and honestly, for the entire financial scene in the country.
But here's the thing, this is so much bigger than just one bank. For the first time in a generation, Ethiopia's entire banking world is being turned upside down. So the real question hiding inside this document is, with all this change happening, what does it actually mean for you? Whether you're an investor, a customer, or just someone watching the Ethiopian economy.
Okay, let's get into it. Because to really get what Dashen Bank is doing here, you first have to understand the new playground they're in. This is not business as usual. We're talking about a fundamental shakeup of the whole system. And this right here is the headline. For the first time in half a century, a new proclamation has kicked the doors wide open for foreign banks to come in. This means a local giant like Dashen is suddenly facing a whole new world of pressure and opportunity. I mean, imagine you've been running the same race for 50 years, and then all of a sudden, international champions step up to the starting line. It forces you to get better, faster. So, with that intense new competition as the backdrop, let's zoom in on Dashen Bank. Who are they exactly? And how are they set up to handle this new era?
Well, Dashen's story started almost 30 years ago. It was founded back in 1995 by just 11 people who gave it a big name after Ethiopia's highest mountain. They started small with only 11 branches, but have grown into an absolute titan with over 900 locations today. But the real story isn't just about buildings. It's that super app they launched. That move signals a very clear, very aggressive pivot to a digital future. The bank's whole strategy rests on these 4 pillars. It lets them serve pretty much every corner of the economy. They handle the big corporations, you and me as regular customers, and they support that vital small and medium business sector. They even have a whole division for interest-free banking. It's a really diverse playbook, and that's a key part of their strength. You see this brand pretty much everywhere, right? But what does it mean in financial terms? Well, it means they're a major force. Think about this. They hold over 11% of all the deposits in the entire private banking sector. That kind of scale gives them a powerful foundation, especially now that new competition is on the way. So here's the crucial point. Yeah, they have a long history, but their eyes are fixed firmly on the future. This is not just some old school brick and mortar bank. They are making a massive push into digital. I mean, that super app handled nearly 5 million transactions in its first year alone. That tells you everything you need to know about how seriously they're taking this new fintech world. All right, so we've heard the story, we've heard the strategy, but does the math add up? Let's dive into the financials from the prospectus and really see what's powering this bank's growth. Okay, I know this looks like a wall of numbers, but don't worry. This is the heart of their financial story, pulled straight from their audited statements. We're not going to read every line, we're just going to pluck out the most important figures from this profit and loss statement over the next few slides so you can see what really matters. First up, let's talk about sheer size. As of June 2025, the bank's total assets hit a staggering 254.5 billion Ethiopian birr. Now, to give you some context, just 2 years before that, the number was 144.7 billion. That is some seriously rapid expansion. And all that growth, it's translating directly to the bottom line. You can see it clear as day on this chart. Profit is on a strong, steady march upwards. It went from 3.56 billion birr in 2023 to almost 6 billion in 2025. That is exactly the kind of clear upward trend that gets investors paying attention. Now, let's look at a key number for any bank, the cost-to-income ratio. It sounds technical, but the idea is simple. It just tells you how many cents the bank has to spend to earn 1 birr. And as you can probably guess, a lower number is almost always better. It's a sign of efficiency. So here's where it gets really interesting. Dashen's ratio has actually gone up. Now, normally that might be a red flag, but the prospectus gives us the why. It's not because they're being wasteful. It's because they're deliberately spending money to grow, building more branches, and, you guessed it, pouring tons of cash into that digital infrastructure. They're spending more now because they expect to earn a lot more later. And that spending brings us right to the heart of this whole thing, the actual share offer. What exactly do they need the money for? And just as importantly, what are the risks that any investor needs to have their eyes wide open about? So here's the offer in a nutshell. Dashen wants to raise a cool 6.4 billion birr. They're going to use that cash to keep expanding and to double down on that digital strategy we keep talking about. It also helps them tick a very important box for the regulators, something called capital adequacy, which is basically just making sure they have a big enough rainy day fund to handle any surprises. Of course, there's no such thing as a risk-free investment, and the prospectus is pretty upfront about the hurdles. The biggest one? That wave of new foreign banks. Then you've got nimble fintechs chipping away at their business, the constant threat of cyber attacks, and, the pressure that rising interest rates put on the whole economy. And hey, don't just take my word for it. This quote is pulled directly from Dashen's own document. The bank itself is admitting that these new competitors are coming in with some serious advantages. This whole capital raise, this is them building their war chest to go out and fight that battle. So after you look at the history, the financials, the future strategy, and all the risks, it really all boils down to one simple, fundamental question for anyone thinking of putting their money in. This is the trade-off right here. On one side, you have a really clear opportunity, a chance to invest in a big, established, profitable bank that is actively getting ready for the future. And all of this is happening at the exact moment the entire Ethiopian economy is transforming. Which leaves us with this final thought. When you strip away all the financial jargon and the forecasts, what are you really betting on here? Is this just a bet on one bank's strategy and its ability to execute? Or is it something much, much bigger? A bet on the growth, the stability, and the future of the entire Ethiopian economy? That's really something to think about.